Great, Dale. Can you hear me?
Yeah, I can hear you. And if you just scroll, welcome back to Face, to a little green box. It's a drop-down menu. You just hover your mouse there, and you'll see a share button that you
Yep.
click, and then we'll see the pictures.
Okay, great. Okay, I think I got that.
You
I think
do?
you should be able to see
Okay,
the S&P
beautiful, beautiful, buddy. All
now.
right, so it's great to have you back. We'll start here, and I want to acknowledge. I read Peter's stuff. He's been bullish for hundreds of handles here, and so why don't you tell us where you think we are? And go ahead.
Good. Well, actually, I forget to some extent what we discussed last time, but I suppose when was the last time we headed off together? I think it was probably November, wasn't it?
Yeah, yeah, and we were talking about, which is something I want to address. The synchronized takeoff with inflation, where part of the narrative was a weaker dollar that was going to drive commodity prices higher. The weak dollar was part of it, and everything was going to be good. It was going to be one of those, and the stock market, despite a stronger dollar, continues to perform. Did that surprise you that the dollar scenario at least shifted or was delayed from being a bear phase to continued strength, and looks like it may want to try the highs? Or anyway, that's
Yeah,
what I
well,
remember from our
yeah,
conversation.
good. Yeah,
Yeah,
that's good
and
because
we
we
were
can.
all both looking for new lows and yields,
Mhm.
and so
Good,
that's the
good.
narrative we were talking about.
No, good. I remember. Well, I mean, a lot of water has gone under the bridge since then, and I'm not surprised that we've seen the dollar sort of hold up. The main reason for that was because I always thought that the dollar would actually top out 2018's correction at a time when we would get the commodities, particularly copper, bottoming out. And I can show you what copper looks like.
Yeah, didn't you think the low
Because
was in? Were you surprised at what happened with copper really flushing, and crude is trying to hold major support? Does this delay what we talked about a few months ago until copper and crude get their legs?
no, I think copper, I've had a very strong conviction
Okay.
that copper would actually drop down to about
Two,
52.65, somewhere. I can show
okay.
you this chart here. Here it is. This is going back to August last year. But
Okay.
the main reason for 52.65, which hasn't been hit yet, is because we simply extend this initial downswing, which is the first phase of the correction for what we've classified as intermediate wave 2. And we extend that by 38%. So here we go down to 52.65. And you can do all sorts of different bits and pieces in between there, but it has to be traded. Now, if I show you copper today, this chart I did about a few weeks ago. So actually it was at the beginning of January, just when the market was ready to turn down. And you can see that we're still en route to try and trade down to this 52.65 area here. We're still trying to get down there. We've actually had a very strong move down in January, and there's a bit of a counter trend rally going on at the moment. But I had a target at the time at 63.40. We got to 63.43.
Okay.
And
All right. So it's probably because the copper futures. Let me pull that up.
yeah.
Yeah, that's mainly what I'm used to seeing the prices in.
I forget you're
So
looking at dollars per pound, aren't you?
yeah. Okay. So I think it was
So dollars per
252 in
pound,
that.
yeah, I mean, dollars per pound, if we take 52.65 divided by
Be
2204.6,
about 220.
about 238 is the target.
Okay. All right. So there's still okay. I just pulled it up on mine. Okay.
Yeah, so about
So
238 would do about. So this thing is going through a counter trend rally.
all right.
And I was scratching my head at the beginning of January because we do our annual reports at that time, and they're pretty intensive pieces of work. And I was saying, well, hang on a minute, the dollar looked like it might have topped out in October, and yet copper, what's going to trigger this next decline? Because we still need to look at 52.65. It hasn't traded down there yet.
Okay.
And so we were sort of umming and ahhing about the dollar. Of course, in the last week, it's become obvious what's happened. And it tallies very much nicely with this idea that copper will eventually trade down to this 238, 239 area, or 52.65 in LME terms.
And that's going to be a major inflection point based upon your work for a bull market in copper. And this was just an interruption.
That's right. And it turns out that, that the dollar index, which broke some resistance levels only 2 days ago.
Yeah.
Over 98. Is actually signaling this extra run up. So this diagonal pattern, I'll actually mark it up. Let's have a look at it on my, for those that are not familiar with Elliott wave and its idiosyncrasies and stuff, a diagonal pattern is a 5 pricing event that you get overlap.
Right.
So it goes out like this. And you can measure these patterns, which is, where my speciality is, so that we can actually have some numbers to work with. And if we extend this initial swing up in 2018, so we go up into the August high here, and we extend that vertically by 38%. This is where the 154 number comes from. And we can verify that by looking at subdivisions within and measurements within this diagonal. So it does look as if the dollar's going to push on a little bit more. Copper might just finish its counter trend rally in the next week and then start turning down to this 238, 239 level. And that's where I think, as you said, the major inflection points will come from, and we'll get everything turning around at that juncture.
Okay, so this final wave up towards, and I see you also have above it 102.79. Is that a different fib target if we get through par 54?
I don't think that's possible. I left it in there because really for tutorial sort of purposes, where we extend wave A by 61.8 instead of 38. Okay. But that's not possible under this configuration. This diagonal has limitations.
Okay.
And the fifth wave should be about the same as the first wave, maybe a little bit more, but not too much more. This would be too high. So that's just really for tutorial. Yeah.
Okay. So, I want to go the euro. It's been under a lot of pressure. And I remember earlier, maybe a few interviews ago, you were looking for about, 107.50 if my memory serves me, which is also, I keep bringing it up. There was a gap in the euro down there on the Macron victory on his election. So let's see what you have here, 106.80. See, so that I remember that being a target, and then we had a shift, and now we're, isn't it something, Peter, that sometimes these shifts, and you have to go with them because they could turn out to be correct, but sometimes isn't our original thinking usually the best?
Well, that's absolutely right. You're absolutely right when you say that. Sometimes I draw these long-range forecasts, and then the big problem with Elliott wave is that sometimes you expect a very particular pattern to develop into that sort of original large-scale scenario, and then you get thwarted because you see some slight deviations and you lose confidence. And over the years, this is one of the things that you can practice if you're doing Elliott wave, is really just to stick to your purpose unless there's really significant negation levels, because this was an original downside target. I thought that actually last October we might have hit a low earlier, because sterling dollar, if you remember, hit a major low just a month before October, in September 19. And then we did this really great 5 price swing event to the upside on sterling dollar. Let's have a look at that. And I thought that maybe all the currencies had therefore taken the same signal, but it happens to be not. So there's some elements of divergence where euro has underperformed sterling dollar since September, October 19. Let's have a look.
You look for that to continue? Because EG looks pretty negative to me, but I was wondering if you thought that there might be a time period where the euro begins to revert back to the mean on EG, where it's really been a bear market move from like 93 all the way down to 84 or so in euro pound. And when the dollar turns, I don't know about you, Peter, but I would prefer, just like in the old days, I would watch the mark against the Swiss. Okay, and I would want the mark to be stronger, and so for a pure bear move in the dollar. And I feel that way now, that for a pure bear move in the dollar, I think euro has to outperform cable. Am I, is that just something I need to forget about my 30-year-old rules and look for
No,
euro to have leadership, to have a pure move, a bearish move in the dollar?
no, I would concur with that because, well, in fact, this chart is euro sterling, and you can see that we've put in a low here. We're coming down a little bit as a retracement now, but I suspect that this is the last fling as the euro drops down to sort of 106 something.
Okay.
This is going to, I would expect this to hold. I think there's a 5-wave substructure in here, 1465, yeah. But the larger picture, you can see a flat pattern here. I mean, if you're familiar with Elliott wave, you tend to look at sort of 3 down, 3 up, and then 5 down like this. And you've got a sort of a horizontal flat. Well, that's the precursor to something up, I think, like this, where we come up all the way up here.
Okay. Yeah, for one more huge
more push. I think it's actually like this. Yeah. So
okay.
that would bring
huge
sort
move.
of, yeah, that's quite a big move. That is a big move, actually.
And that means that, you want to be buying dips in euro pretty soon, rather, because now people are going, well, the euro's crummy, and the only currency against the dollar I want to buy is, cable, because it's acting so much better than euro. And right at the same time, they're going to have this psychology, things are going to flip on them.
Well, I think the Europeans, the reason why the euro is dropping down is because of PMI manufacturing. It's been really hit hard. It's probably the weakest PMI in the world at the moment. And the main reason for that is purely because of the VW scandal. The car manufacturing industry has collapsed. And looking at just talking around here in Germany, and of course Munich is the center here for BMW as well. I've been talking to sort of guys, and they're saying, well, we don't know what car to buy these days. We don't know whether to junk our diesel engines, because everybody loves diesel here in Germany. Right. We don't know whether to junk our diesel cars, go to petrol because of the emission problem, or whether we should be buying Tesla
EVs.
or some sort of hybrid,
Huh.
So everybody's stuck. They're waiting for something to break. And so, the PMI manufacturing is really downbeat. And it's not that robust in Europe anyway, but that is a big drag.
Okay, does a China slow down based upon coronavirus and the country being shut down, and we really don't know what's going on, getting official numbers. Is it playing into any of your wave counts that you saw coming or are underway? I know I'm not much of a fundamentalist either, but and looking at your wave count in the S&Ps, people that are saying it's a black swan, there's no way there's a black swan based upon your work until the end of 2021, at least the end of 2020, I think you're saying, or 2021, before we enter a generational bear market. So based upon that wave count, it's hard to see that anything too terrible is going to happen between then.
Well,
besides
that's right.
the re-election of Donald I'm not supposed to be political.
Don't we love Donald? I mean, the thing is that I think the biggest indicator that you can watch for re-China is just copper. So we come back to that same chart.
Okay. Yeah.
And this is telling us, there is a little bit of inherent weakness. We know that the economists have been revising down GDP in China. Previously to this, it was thought to be around 5.5% for 2020, but the economists are pushing it down by 2 or 3% notches because the next quarter is going to be really hard. A friend of mine who's running a business who's importing products from China, he's manufacturing there, importing them into Europe. He said, we've got ships already left before the whole coronavirus broke. They're still on sea at the moment, so we're getting lots of deliveries coming in over the next month. He said the big problem is April, May. He says we've got nothing coming out to fulfill our procurement for April, May. So all the economists are basically cutting down GDP and everything. But actually, there are massive green shoots here arising, because we come back to the inflation pop scenario, which we talked about in November and you mentioned earlier, where commodity prices are zooming up. We just need this last little bit of a dollar strength to finish. We need copper just to trade down that little bit longer. Some of the other base metals need to come down a little bit more, lead, zinc, which are very much into the car industry sector as well.
How about, go ahead, Peter.
And then everything's going to go up a lot. Yeah. And the only drag that I've got in the commodities, which seems that, of course, you look copper here, looks as if it's almost reaching its downside target already. But the one commodity that worries me a lot is oil. Yeah, but it's working so far. I mean, let me show you an oil chart. I mean, folks, hang on to your seats, because, you don't want to sort of stare and look at this for too long. But this is the weekly oil chart. And I need to get oil prices down below the December 18 level. This is when we were trading here at 42.36. I want to see that in order to complete a corrective downswing from the October 18 high here, 76.90.
Wow.
And if we can see that, in the next couple of months, which I think we can, I think it's working. We've dropped a lot since January. Then we're going to go swoosh like this to the upside. It's going to be massive. It's going to be massive. And, we're looking at, and we're tracking probably.
And you've had this count for a while. I mean, it took a while. Didn't take a while? I mean, the first break we had, but what was happening for the last couple of years in this tight range, I thought we'd be there for a while. But you've had, I know you were looking for under $40 oil. I forgot if this is the same target, but it is pretty much the same count you've had for a year or so, isn't it?
Absolutely. I mean, it hasn't changed at all. And when you go back to, let me just, we can always sort of talk about this over the long term. And it takes a long time for these things to manifest, 2016 was, of course, a very poignant time. And I'm just pulling up a couple of charts spontaneously from my 2016 archive. This is oil, and I was predicting that this was a huge zigzag coming down, and that we would come down to about $25, $60, $26, and then we could go into record highs. And we hadn't even started this move. I'm just flicking through in my database here, and let's just see where it gets to. Well, here it looks like it's finished there,
right? And
eventually we get to a point where we see this huge, I won't show you too much.
Like a super cycle,
But here it is. Here's the $26 low, and then you can see it's
wow.
And in order to get up to new record highs, this is wave B of an expanding flat on a very long-term chart. In order to get up there, we've got to get up there in either a zigzag or a double zigzag. Well, you can always determine whether it's going to be a double or a single zigzag by the initial upswing, which occurred here in 2016. As soon as we got to that, we could extend that by 61.8, and then we would get the completion of a single zigzag. And we know that we're heading for higher highs. And that's where we can extrapolate then up to sort of a break above 147. So, this is a very long-term forecast.
Great look. Yeah, there's going to, so acquiring oil-related assets under $40 oil could really be a nice investment, not a trade, an investment. What your take on gold during this last push up in the dollar, which gold hasn't been that correlated to the dollar because it's held up pretty well with the dollar strength. So what are you thinking here?
Well, gold is very, very complex, and I could talk about gold and silver and its interrelation with platinum for hours. I mean, we don't want to do that, but it has to be said that the big concern that I have is that silver's underperformed. When we got this big swing up in 2018-19, silver underperformed. It hasn't even broken above this high here. Silver was $21 at that time. Silver hasn't broken above. Platinum is looking really bearish to me. And I've got to say,
the only star is palladium.
The only star is palladium, absolutely.
Yeah.
And for me, this is a big concern, gold. For starters, you've got the commitment of traders, next speculative long positioning over 300,000 contracts.
And it looks like you have two drives. So I'm actually looking, I think for a great short at new highs. I've been talking about it for a few months before I saw your count. But it looks like you would allow maybe a pullback to 1500 before we go to 1628. Or are we on our way?
I think if it goes to 1628, it's going to do it within the next few weeks.
Okay.
I think if it's going to do that, I don't think it'll come down and then go up. I think if it's going to hit that number, it may not.
What a great look.
We've hit 1611 already.
Yeah.
Look, if I extend this by 61.8,
yeah,
this is how the 1628 number. That is a formidable resistance area.
Yeah.
And if gold cannot get above that area, or perhaps even this 1611 area, you know,
Yeah.
I'm not long of gold at all. I don't like it at all.
Okay.
Then I think there's a real risk that this can drop. And the main reason for that is because silver, as I mentioned before, has not been able to really perform. And
it's been the weak sister. I mean, we've already made a few lower highs in silver in comparison. Okay.
And this is a silver chart that really worries me. It's a sort of an alternate count at the moment, but you know, it's done nothing to refute it. You can see that we're still well below the 2016 low, the equivalent level on gold.
Yeah.
Here it's 3 waves up, which is very typical of a first wave in a diagonal, which I've drawn to its completion. So that means that, you know, silver could actually have this big drop down to $15 before it goes up again. You know, and that's a concern. That's a very big concern. You know, you need silver to outperform gold.
People won't understand it because it'll be happening with a weak dollar, so they're going to be buying dips in gold and silver all the way down because they'll go, well, now the dollar is weak, precious metals have to go up.
Well, the big thing that changed, you know, during that 2019, last year's big rally on gold was the fact that fund managers started to get involved for the first time in a serious way. They didn't really manage to pick up let's go back to gold. They didn't really pick up the advance in 2016 because they'd been moving down for 3 or 4 years. And they didn't really pick it up. They only started to pick it up here. And it was for one reason only. Of course, you know, there was the trade war between the US and China.
Right.
The fundamentals weren't looking, you know, good. And they were very reluctant to put money into the stock market. So they started to buy gold, and especially when it broke the 2016 high. So they all started rushing in. Since then, of course, I think Bank of America, Merrill Lynch, they put out their fund manager survey last year in October, November, and they said only at those months had fund managers start to allocate a lot of money back into the stock market. And of course, that drove the stock market forward. And since the stock market has been making repeated higher highs, gold's suddenly fallen dead. I mean, it just can't make any progress because all the money is being driven into the stock market. And until that changes, I don't see why gold should go up. And I don't think it will because the stock market's very bullish. So let's go back to the S&P one more time and have a look at what's going on there. This is, well, I'll show you a chart which I had when we spoke last. This was around November last year. And you can see that I had this big uptrend still developing up to 34.78 for minor wave 3. This was really a very, you know, concise forecast for a continuation of the trend that actually preceded this from December 18. And here's the chart since, and we're up at, you know, 33.60 now. We've still got to get higher, and I've raised the targets for minor wave 3 now repeatedly. It's very, very bullish, the stock market. There's no doubt about it. It's got a lot more to do. So why would you buy gold? And I think eventually, as the stock market continues to move up, once we get across this hurdle of the coronavirus, fund managers will then go through a second phase of allocation. I don't see why they would be buying gold. That doesn't make sense to me.
How about a quick look at US dollar yen, which I know long-term you had a very bullish count. Has it begun, or are we going to get one more shakeout?
I think dollar yen looks something like this.
Okay, one more little dip.
I think there could be a little bit of a correction down here because I can see there's a little 5-way dink down here.
Yeah.
So I'm thinking it could fall back a little bit, but generally this is going to take a look at 121.80. I think.
Okay, and I think that's going to accompany higher yields. eventually, don't you?
Okay, that's a good point. I don't know.
Okay, that's a valid answer.
Yeah, I don't know. I must admit, I might do a correlation after we've spoken today and have a look.
Okay, it ties in with your lower gold forecast.
Okay, yeah, that might be. At the moment, I'm still looking at these yields trading down to a slightly lower low. Let me just show
135 to 125 on the 10.
Yeah.
One. That's the 10.
This is the 10-year.
112.
Yeah.
Wow. Okay.
This is we need a lower low.
Okay.
We picked up this November high last year and said that's a 3-wave correction. We get a 5th wave decline.
Yeah.
The daily chart looks a bit like this.
Okay.
Wow. So we need we need to get down. We need to break this low. If you look at the 30-year yield, you'll see that where are we? Yields 30-year. Here we go. This is the 30-year yield on a weekly basis, and got targets of 160.
Okay. That's 30 bips under the recent low. Okay, so, I want to wrap it here with something that you've been spot on for a while. I got long Bitcoin assets January of last year based upon your bottoming call. And then the retracement we had to about $6,000 or so was a buying opportunity in your work, and you nailed that too. So you've been there for major turns in Bitcoin since I started following your Bitcoin work a year and a half or so ago, and that's when you just started covering it. So great calls, Peter.
Thanks, Dale.
It was a 3,100, and then you saw the pullback from 13.8, pulling back for a 2 or a C or whatever. Nice.
Exactly. Well, we got a really nice call back in December to start buying this thing. I have to admit that we haven't seen any price expansion. It's been a topic for some of our clients recently, because during this advance we've seen very little progress to the upside, and it concerned a couple of our clients. And they said, well, can you put in an alternative scenario? This is it here. And we sort of said, well, okay, if this gets up to about just above 10,000, and it starts to stall and doesn't continue up, it could drop down here and extend this correction.
Okay, I'm going to be using my magnet on my screen, looking for your alternate count, so I could buy more down there. So I just use a magnet on the on the candle, and I drag the market in the direction I want it to go.
Okay, good. It's funny. It sometimes works.
You have to have 100 people doing it at the same time. Go ahead, Peter.
No, it's funny. It's funny because sometimes if you look at something hard enough, it actually happens before your eyes. But anyway, that's an interesting subject for another time. Okay. I'm not bearish like that. I did that alternate count because I had some very worried clients that we hadn't seen price expansion, which is defining a 3rd wave in here. And it's still, I must admit, it's still looking rather tentative. We've been long. I have to say that some of the clients have squared off, but I would probably have a trailing stop in here, and you can put it below any one of these recent corrections like here. This is, I know it's quite huge, and it's very volatile, but if you're not leveraged, and you should really try and stay long, try and give it an opportunity to continue trading higher.
Okay. Great calls, Peter. All right, so I can answer this question. Someone's saying, those counts, is it automatic from your software, or do you do the job, Peter? Isn't the answer both, because you program things?
I see. Well, actually, most of the charts that you've seen today during the session are actually manually drawn. And I have about 700 worksheets. These are our production charts, which we publish in our reports. But all of the work goes on in the background, and we do all the measurements. This particular software is quite good because we can manipulate the data. We're using some log scale bid price ratios. And if you want to pick up on some of the ratios that we have applied, and that we use. They're not standard, I say, in the industry, but they've worked for us over the last 25 years plus. And you can always subscribe to one of our
Why don't you
reports.
show your website, Peter, where people can follow you? And
thanks, Dale. This is
find you.
wavetrack.com, and if you go into this, and you can actually go into the registration and subscription area, and you can subscribe to our bi-weekly report. It goes out twice a week. It's $39 a month, so it's not going to kill you. And it's got tons of information there. And not only is the current forecast, short-term forecast in there, but we do a lot of tutorial explaining how these ratios are formed. And certainly our subscribers over the last several years have said they learn a lot from these reports. So it's a double whammy. You get some forecasts that are tradable, and you can also learn from some stuff as well. So do have a look at that. The actual sort of what it looks like is this report, but we've also got online where you can download this report, and you can see them online as well, all the forecasts. So if anybody's interested, do take a look, because it's very informative.
Thank you, Peter. I thank you for coming in here, and every time you're here, something gets crystallized for me, and I know if it happens for me, it's happening to those that are listening now or see the video later. Great stuff, Peter. Thank you, my trading warrior brother. I hope 2020 is your best year ever in every way.
Great, Dale. I really appreciate the opportunity to chat with you today. I know we should do it more often, but just a great pleasure. You're a great example for us to work through for the industry, and I admire you a lot. So thanks again. Appreciate it.
Okay, it's with the greatest pride, Peter, I'd like to announce how you've humbled me. Good try, man. All right, everyone. That's a wrap for today. See everyone tomorrow, TGIF. Thanks again, Peter. I'll see you guys. Remember, don't just count your pips, count your blessings, and have a great day. Thanks, Pete.